Hello everyone, welcome back to Unday Radar Talks. NIO stock surged 10% again on Monday. Perhaps the capital that drove the stock price up has not yet exited the market, so the stock price cannot fall yet. The stock opened up a profit margin again on Monday, and the current stock price has reached $5.57, which is a considerable profit margin for capital that entered the market below $4.48. So it may be dangerous to enter the stock at this time. Some capital exited the market last Friday, but the bulls seemed to digest these chips and continued to push up the stock price. So the $5 position generated a lot of trading volume, and these chips may come from the selling of locked-in capital. But the problem is that the stock generated a lot of trading volume at $5.22 and $5.56 during the surge on Monday. So these two positions are very critical. The stock's trading volume on Monday was slightly higher than the previous two trading days, which means that when the stock price was at the $5.56 level, there was a possibility that large funds cashed out and left the market, but the stock price seemed to be able to find support at $5.22. So it was not easy for the bears to significantly lower the stock price. Let's look at the 15-minute chart of the stock. We can see that the stock price rose strongly in the morning trading on September 5th, accompanied by a large trading volume. This is a key node. The stock price officially entered the rising stage here, which means that the stock price will not fall to this position in the short term. The stock price retreated slightly after rising in the morning trading on September 6th, accompanied by a large trading volume. There should be some capital exiting the market, but the stock price did not fall as a result. Instead, it took off again after a deep squat on September 9th. However, we also saw that there seemed to be some selling of chips in the afternoon trading of that day. Although the stock price did not fall, it may be a negative signal because the stock price has risen a lot. It is also very likely that the profit capital sold some chips at this position, but it is impossible for it to be sold out in one trading day. Let's take a look at the capital flow data of the stock. We can see that the capital flow data of the stock in the last 3 trading days is basically consistent with the performance of the stock price. As mentioned earlier, some capital withdrew from the market on September 6th, but the optimistic thing is that this capital sell-off did not lead to a drop in the stock price. The capital that pushed the stock price up seemed to have digested these chips, because the stock price opened up a 10% profit margin again based on this position. The net capital inflow amount of the stock on September 9th was lower than that on September 5th, but the trading volume was significantly higher than that on September 5th, which reflects that the proportion of capital outflowing from the market on that day did increase, but the capital inflow into the market was still a lot and concentrated in 2 positions. So the capital flow data of the stock in the past 3 days seems to reflect a mixed result. Let's take a look at the market position distribution data of the stock. Although the stock may still rise further, the current position profit rate of the stock is as high as 99%, which puts great pressure on the stock price to continue to rise. We can see that the stock has a large position at the level of $5.56, and the stock also has a large position at $5.22 and $5. If the stock price falls, then these 2 positions can provide a strong support for the stock price, so it is not so easy for the shorts to pull the stock price down. But as mentioned before, the stock price seems to have little room to continue to rise, because the $4.48 level has a profit margin of more than 20% from the $5.56 level. In this case, the stock price will face great resistance to continue to rise. So in this mixed situation, I think the stock price may fall, but the room for decline may be limited, and the capital that has been profited is unlikely to be exhausted in one trading day. So even if the stock price falls, it will have a support at the $5.22 level. If it falls below this price, the $5 position is a strong support, so I will use these 2 prices as the target price range after the stock price pulls back. Okay, guys, this is my price forecast for NIO stock. Thank you for watching. If you like my analysis, Please click the subscribe button and give a thumbs up. I will bring you more latest price forecasts for popular stocks later. See you in the next video.